All right, let's talk some markets. Phil Streible joins us for Friday check-in, Chief Market Strategist at Blue Line Futures. Phil, good afternoon, sir. Let's start maybe with stocks since we're heading into the close. Any chance we get some last-minute momentum?
I don't know. It's been a pretty quiet day. I think that traders are really kind of exhausted after the volatility that we've seen this week. And you see that kind of, it's already been made or lost. You know, the battle was already won, Wednesday and Thursday. So I think today we got a little bit less volatility in the market, only about a 40-point range in the S&P 500, where typically we've been seeing something closer to like 80 points, 80 or 90 points a day with this recent volatility. So I think that traders are taking a little bit of a step back, digesting the news.
So what do you think? Is this justified? 50 bips change the situation? A little surprise? How much juice does this kind of inject into the trading behavior and sentiment?
It definitely does. And I mean, if you look at, Thursday's broad-based rally amongst many different commodities, it's obviously Fed dovish. U.S. dollar is cycling down to new lows. Inflation is reaccelerating. So I think we're going into a stagflationary play. I think the acceleration of the pace of the cuts is what's going to really bring forward that terminal rate to 3.25%, 3.5% by June of 2025. So everything had to rebalance, and that's why we saw outliers on the amount of the movement yesterday. November, the next meeting is too close to call, whether it's 25 or 50, and we still have two more employment reports before that particular FOMC meeting. So there's going to be there's a lot of data too coming out next week. A lot of Fed speakers. I don't think they can move the needle, but maybe the data gives us a little bit better of a story.
All right, what moves it here? I mean, when you get such a big move, does that sort of immunize us at all from volatility around economic prints? Because it was getting pretty wild there for a couple of weeks.
Yeah, it's going to be, it's all surrounding the labor data right now. I mean, if you take, I know we'll transition to gold and things like that. Thursday, the data point reaction from the initial claims number, gold fell $20 over the course of 20 minutes following that lower expected initial claims print with 219 versus 230. The bargain hunters did come in and emerge and lift that market after. So what I'm telling you is that, like, if you're like a gold investor and you feel like you missed this move here recently, Thursday could be your best opportunity for the next quick dip, especially if those initial claims start trending a bit lower.
Gold the most reliable thing right now?
I think so. I think it's the most reliable commodity. It's got everything working for it. It's got the central banks. It's got a seasonality that it tends to go up. It's in the right economic environment at the moment. I think that the standard retail investor is not involved with it at the moment, and that's based on the ETF. ETF total purchases are really lagging right now, but historically, the ETF investor doesn't come in until within 30 days of that first interest rate cut. So they need the confirmation before they're going to actually reallocate their portfolios and start to invest in a product like that. And so I think that they start to come back in maybe at the start of next quarter.
That's a good take. I like that stat about the ETF flows. It's really interesting the way gold's disconnected from real rates. It's a really important thing. There's something else that's happening, right? There's some other premium, to your point, whether it's other central banks or maybe it's the geopolitical, whatever the premium may be. Like, there's no question that gold's doing something pretty unique.
Yeah, and something I do think that we might be a little ahead of ourselves, especially with today's move. The Bank of Japan, they did come out. They kind of kicked the can down the curb. They weren't very hawkish. We saw the yen sell off. We saw the dollar index come up. Two-year treasury yields, they came up just a bit, but that should have weighed in a bit on the gold market. So it just tells you the resiliency of it right now. I know that we're going to be working with some people where we want to be buying those corrections, something like just below 2,600, 2,585, 2,580 would be another great level. That swing low we just saw Wednesday and Thursday was 2,575. And I think that gold really goes back to a neutral state if you see it break below 2,556. So call that maybe where you start to lighten up a bit, where it got a little too extended.
Okay. Hey, I like that take. Looking at the commodities, Phil, Crude generally gets stuck anytime it flirts with anything above 70 bucks. Is there anything to trade in there?
I mean, crude is starting to transition more into that stagflation where it's starting to rise. The rising tide is lifting all boats. It's always the speed and the magnitude of the rally is heavily anticipated by the pace of the interest rate cuts. There's no sign of an imminent recession. And Jerome Powell really knocked that argument down quite a bit. So that supports crude oil in some sense because the markets are pricing in for the soft landing. You really want to watch the geopolitics. You want to see if there's any supply disruptions. Maybe demand comes up a bit because we don't have that recession, but you need that supply to come down just a touch, and that's what keeps lifting crude oil prices higher.
Okay, so then where's the best trade? What's the most fun thing? Hit me, Phil, before we say goodbye.
Best trade right now is still sugar. Sugar price is probably one of the best commodities on the week.
Yeah.
They got fired on in Brazil. They've got limited supply. So that's really accelerated the best. I know you want to hit on Bitcoin back to neutral.
Sure.
Above the 50-day, above the 200-day, got to break out over 64,500. Then it'll take off bullish, and the momentum chasers will come in there. But it is the right economic environment for Bitcoin, where you get bearish below 56,200. So trade the range, but you see the breakout. That's where you want to press the gas.
All right, 65, the threshold. I heard there.
64,500. It's actually 64,435. So you got to be really
beautiful.
precise here.
64,435, a very precise number for a man rocking a 36 and 117 team on his. We appreciate you, Phil, with the Chicago love.
I love it. I love it.
All right. I don't know if folks tell the White Sox in that clover there. All right. Thanks, Phil. Have a great weekend, sir. Chief Market Strategist of Blue Line Futures coming up. Let's talk about the.